Hey everyone, it's Paul with your Bold Profits for this Tuesday. Before I get into today's Bold Profits Daily, I want to ask you to please subscribe to this channel. And if you enjoy the video that you are watching, please make sure to give us a thumbs up, say something, ask us a question that we can answer in future episodes, because it helps us with YouTube and also helps us just grow the channel. And if you like the ideas that are presented to you in these videos, please make sure to join our free e-letter, completely free. It's called Bold Profits Daily. My amazing caller, Amber, incredible Ian Dyer, phenomenal Patrick, terrific Tamara. That's our incredible team, along with Nick Tate, who writes for Bold Profits Daily. You get their amazing, astonishing insights completely free. And if you've been watching this for a while and you are interested in getting stocks that are laser focused on America 2.0 and the fourth industrial revolution that you might want to look into further, then go and check out profitsunlimited.com. There'll be a link to that below. All right. So this week, I want to kind of address a few things with respect to some of the mini portfolios that I have released recently. And before I get into that, let's talk a little bit about the portfolios that we closed out because 2020 was ending and it's time to present some new ideas to try and capture your interest, see if we can get you to follow along, and hopefully you will also make some money. So some folks that are actually subscribers to our paid services are wondering why we provide these mini portfolios. For example, all of 2020, we had a portfolio called Stuff. Stuff, as some of you might know, was inspired by trying to copy Jim Cramer of Mad Money fame. Jim Cramer came out with this acronym called FANG, and it turned out to be amazingly successful. The original FANG was Facebook, Amazon, Netflix, Google, and of course that portfolio, if you owned it for several years, really destroyed the market, completely smashed it into pieces. And I thought, well, I believe that I can make an acronym portfolio that can do equally well. And I came out with Stuff. And Stuff was Spotify, Tesla, Uber, Facebook. And that portfolio did destroy the market. And when we stopped counting it, which was as of January 12th, that portfolio was up 484% versus 30% for the stock market. And so that did amazingly well. And we have now replaced Stuff with a new acronym portfolio that have stocks that are actually from my Profits Unlimited portfolio. Now that's called Buzz, and you can track back to the release of Buzz, which was from a couple of weeks ago. And Buzz, as I mentioned, represents stocks that are actually in the Profits Unlimited portfolio. So the reason to put this portfolio out is to try and get more people to follow us on YouTube, follow me on Twitter, subscribe to Bold Profits Daily, and hopefully even subscribe to Profits Unlimited, because it gives you a sense of the kinds of stocks that we are looking at. When many people look at the stock market and they even read about things, whether you're reading websites like MarketWatch or Yahoo Finance, or you're on social media like Twitter or Reddit, most of the stocks that people focus on tend to be, from our perspective, very sort of, we call them America 1.0 stocks. And America 1.0 stocks means that in our judgment, in our belief, these are stocks that represent a way of doing business, represent products and services, represent business models that we believe are going away. We believe that we are at a moment of extraordinary, incredible, phenomenal, and once in a lifetime change. It's sort of like being there at the birth of sort of railways, telephone, shipping that goes across the world, and where one way of going through the world ended and a new way came about as a result of what we now refer to as the Industrial Revolution. And we believe that that's what is unfolding right now, and our term for it is America 2.0. Other people call it the fourth industrial revolution. And the essence of it is really that we are in a digital age where everything really ultimately goes through a computer chip, a computer, and we use these tools to digitize all aspects of our life. And that revolution is just really in its beginning stages. And that's what we mean by America 2.0. That's what we mean by the fourth industrial revolution. That's what we mean by when we talk about old world versus new world. And our services at Bold Profits, which is the name of the publisher of all of my services, all of my newsletter services, we focus exclusively on these America 2.0, fourth industrial revolution, new world stocks. And we equally have the view that the old world now is at the point where it's really beginning to creak. In other words, these companies are decrepit, they're old, they're obsolete. And we have seen over 2020 and the previous few years significant signs that this world is really starting to accelerate its decline. And the crisis we went through with the virus in 2020 has really accelerated so many parts of America 2.0, the fourth industrial revolution and the new world, into places like medicine, for example, with telemedicine, into places like using companies, services of companies like Zoom for our school, and to doctor's offices or to attend church. And there are any number of now additional technologies, revolutions that are now unfolding. There's new industries like space that are just being formed, technologies that are really just beginning to get mass use like 3D printing. And that is our focus. And this is the purpose behind our mini portfolios. That was the purpose behind Stuff, which was Spotify, Tesla, Uber, and Facebook. Those represent various innovations and revolutions in media and transportation, that are ongoing, and our new portfolio buzz, which is Bitcoin, Uber, Zoom, and Zillow, also represent various revolutions, changes going on in everything from real estate to money. And then last week, I also introduced our newest portfolio, which is called HAPI, and HAPI is 4 ETFs, and this replaces our old STIX ETF. And before I deal with HAPI again and how it fits into our worldview and how we are seeing the world and why it helps you get into America 2.0, the fourth industrial revolution, the new world, and out of the old world, out of America 1.0, and to some extent out of the old industrial revolution, which is fading away in terms of its utility. And that means that you're going to end up losing quite a bit of money in there, I believe, over time. All right, so last year we had STIX, which was 5 ETFs, and it was the Semiconductors ETF, the Solar ETF, an Alternative Energy ETF, the Housing ETF, Biotech Etf, and the Industrials ETF. And you can go back and track back on the channel as to why we put it in. Today, I just want to go into why we closed it, because we got a question on Facebook, and we also continue to get a few questions in our YouTube comments as to whether we're still positive on these. And one of the critical reasons that we actually ended STIX is that obviously it was the end of the year, end of 2020, and we wanted to put a new portfolio out there because the express goal of these mini portfolios is to try and draw you in, try and get you to follow us on YouTube, hopefully subscribe to Bold Profits Daily or to our newsletter, Profits Unlimited. So that's the purpose. And by bringing a new portfolio, as new subscribers come in, they too have a chance of sort of starting afresh. The second reason for it is that one of the ETFs, in particular the Solar ETF, which went under the ticker symbol TAN, that particular sector of the market, from our judgment, from our view, has gotten really very sort of a bit hyped up, and where some of these companies are well beyond what we believe they can achieve over the next coming years, because their prices have risen so significantly that they're a bit ahead of their technologies, a bit ahead of their business models, and well ahead of anything that we believe they can generate as a business. And so we felt the need to sort of take that one out. And that was one of the other reasons to really end STIX, which is that we wanted to sell the solar ETF, which was TAN, and reflecting that across our services, we have been selling and have sold a significant number of these kinds of stocks that have been in our portfolio. And we've been in it for a couple of years. So our folks have made lots of money, including in stocks like Plug Power, where our subscribers made 10 times their money. Fuel Cell Energy is another, Enphase, Solar Edge. These are all stocks that we got in early and have sold out. And I wanted to reflect that thinking in the ETFs that were I had talked about, particularly in STIX. And that is one of the other reasons why we sold STIX out. So that brings an end to STIX. And just to recap, we closed that out on January 15th. And this was also a tremendous portfolio, did 84% versus the S&P 500, which did 24% over the same time frame. So I mentioned earlier that we now have 2 new mini portfolios for our YouTube audience that we are going to continue to monitor and talk about as 2021 unfolds. Buzz, as you might know from looking at the previous video, is Bitcoin, Uber, Zoom, Zillow. And I'm going to just go a little bit into HAPI, which was just released, which is a gaming ETF, which is HERO, HERO. ARKF, which is a fintech ETF, which is put out by our friends at ARK Invest, PRNT, which is a 3D printing ETF, and the last one is a holdover from STIX, which is ITB, which is the housing ETF. Now, many of you may be wondering, well, Paul, why are you keeping the housing ETF? And how does that play into America 2.0, the fourth industrial revolution, and also the new world? And the one thing that is going on that's societal, that we are invested in as part of the megatrends, which is part of America 2.0 and the fourth industrial revolution, the new world, is the coming of age of the millennial generation and Gen Z that's coming right after them. And one of the big things that these generations are doing right now is they are very interested in buying a house. If you go to the cities that really represent these generations, there is a housing shortage, a very, very significant and large and growing housing shortage that is ongoing. And it means, in our judgment, that there is going to be good housing activity, good housing prices in these cities. And that we believe is going to be captured by the companies of today, which are home building companies and also companies that really sell into for people that are buying homes, furniture, and all of these kinds of things. The second element as to why we have kept ITB over from STIX is that we believe that over the next 3, 5, 7, 10 years, you are also going to see the emergence of new techniques of building, because there is actually a labor shortage for building houses. And we actually believe that one of the other ETFs that is in HAPI, which is PRNT, which is the 3D printing ETF, we are going to see the beginnings of really 3D printed houses starting to come to market, first slowly and then emerging as an actual choice, because for many people, the cost of housing is simply too high and we need cheaper ways to build a house. And as I mentioned earlier, there's a labor shortage in terms of the housing market. And so we need technology to be able to come and substitute for that. And that's a second element to it. And the third thing that is also happening is that the cost of building a house in terms of the materials that go into it are also rising in terms of lumber, cement, and others. And 3D printing is a way to really get around many of the problems associated with the cost of housing today. So that really represents 2 of the ETFs that are in HAPI. Now to go at the ARK Invest ETF, one of the areas in our country, in our economy, that has really lagged innovation is the finance sector. The banking sector has largely pretty much, other than putting up a website and giving you access to your money online, they have largely done nothing to innovate. And I believe that in 2021, you are going to see many disruptive new introductions that really go at banks, go at insurance companies, go at the old world of money and finance and insurance and that entire world and start to disrupt it at its core. And with that, you will see many America 1.0 companies that were previously known as blue chips really start to fade, like the way that Sears and Macy's and JCPenney have faded away in the retail world, and other companies have begun to fade in other industries. And this is why we are telling you that ARKF, which is the ARK Invest FinTech ETF, is something that I believe can rise a great deal as these companies really start to go and capture share from the old world of money and finance. And finally, Hero is really a gaming ETF. And this in many ways is a bet that there is actually going to be a continuation of the extraordinary, immense growth that gaming has seen over the last 3, 5, 7 years. And when you add in new technologies like virtual reality, augmented reality, the use of holograms and other, you are going to see an explosion in the number of platforms for gaming and its use. And that is the other reason why we put HAPI in there. So the reason to go into all of this is to really try and help you connect all the dots. Why do we put these portfolios out? Well, it is to ultimately gain a following, is to try and gain subscribers. Why are these ETFs the ones that we focus on? It's because these are the types of themes, technologies, megatrends that we believe represent this once in a lifetime moment in terms of transitions, in terms of really a radical revolutionary shift in so many different aspects of our life. And so that we can illustrate these to you, showing you ETFs and then actual stock picks that we actually use in our paid newsletters. Finally, I do want to mention something that people have been asking about. What about the remaining ETFs in STIX, which is the Semiconductor Etf, the Biotech Etf, and the Industrial Etf? And in truth, I still like those industries. I still like the semiconductor sector because this represents, I believe, the essence of the fourth industrial revolution, America 2.0, the new world, which is chips, sensors. And so even though it's no longer in our mini portfolio, this sector is still one that we like. Same thing with biotech. I believe that you are going to see astonishing, incredible advances in biotech. And the Biotech ETF that was in STIX is something that I still believe still has upside because of all the advances that are really packed into the companies that are represented in there. And finally, the Industrials ETF, I believe, is a way to bet on new and emerging industries like space, where that is going to go to the industrial sector of our economy. So I still like that sector as well. And we just really had to close STIX off. And those are the reasons why we closed all of those off when we closed out STIX. So that answers a lot of questions, hopefully, that we have been receiving, and also hopefully connects a lot of dots as to what's the role of these portfolios, how do they connect to what we do in terms of our investing at Bold Profits and across the services that we have here. So hopefully you enjoyed this video. Please don't forget to subscribe to the channel, give us a thumbs up, and comment below on if you've begun to invest in our new mini portfolios in either Buzz or in HAPI, and we will look to try and address your comments and questions in future videos. Until next time, this is Paul saying bye.